We're just past the middle of the trading day here on Wall Street, and markets are wobbling. The Dow is on track for its worst day in about a month, while broader indices are feeling the weight of big tech and a fresh wave of tariff headlines out of Washington. Let's bring some clarity to the chaos in this hour. The big new development since our last check-in is the escalation on trade policy. According to reporting from MarketWatch, President Trump is threatening what he himself called obnoxious use of tariffs after the Supreme Court struck down his earlier sweeping tariff program. A follow-up piece notes that the Dow is sliding as he looks to impose replacement tariffs, and that's creating a visibly uneasy environment for anyone holding U.S. assets. Traders are reading this as a renewed risk of higher input costs, disrupted supply chains, and potential retaliation abroad. That tends to hit globally exposed industrials, autos, and parts of tech first, and it adds another layer of uncertainty on top of already fragile sentiment. At the same time, the market's former leadership is under a microscope. A MarketWatch breakdown of the so-called Magnificent Seven and other AI hyperscalers argues that the group has turned into the Lag 7, dragging on the S&P 500 instead of powering it. Another piece asks why NVIDIA's earnings report doesn't move the entire market the way it did a year ago. The idea there is that investors have broadened out into other AI names, so NVIDIA still matters, but it's no longer the single point of failure for the entire AI trade. For index fund investors and passive money, these stories highlight a key risk. If the largest weights in the S&P stay under pressure at the same time macro headlines are deteriorating, it becomes harder for the headline indices to shrug off bad news. On the stock-specific side, Domino's is a clear standout in an otherwise choppy tape. MarketWatch notes the shares are rallying after a solid earnings report and a sales beat, with management pushing back on the narrative that consumers are dramatically cutting pizza and quick service spending. That's a bright spot in consumer discretionary, and a reminder that brand strength and execution can still win even in a tougher spending environment. In healthcare, there are two quieter threads professionals are watching. One is policy. There's new analysis out on efforts to rein in Medicare Advantage cost. It's more of a slow burn story, but any sustained attempt to control government healthcare spending can ripple into managed care stocks and providers over time. The second is pharma competition. Novo Nordisk shares are under pressure after a head-to-head Phase 3 trial showed its next-gen weight loss drug didn't produce as much weight loss as Eli Lilly's rival product. That reinforces just how competitive the obesity drug space has become and why trial data is moving billions of dollars of market cap in that corner of healthcare. There's also an under-the-radar growth angle in space. A piece on York Space Systems points out that the stock has struggled since its January debut, but some analysts argue it's built for the space megatrend, citing potential technological and financial advantages. That's the kind of early-stage, high-volatility story a lot of growth-oriented traders keep on a background watch list rather than treating as a core holding. Into the next hour, I'll be watching three things. First, whether the tariff rhetoric cools down or heats up further. Every new headline can shift futures and sector leadership. Second, how the Lag 7 trade evolves. Do we see dip buyers step into the big AI and cloud names, or does money continue to rotate away? And third, whether today's weakness in the Dow starts bleeding more heavily into small caps and credit-sensitive areas, which would signal a broader risk-off move rather than just a leadership reshuffle. We'll be back with you around the close to break down where this ultimately settles and how the tariff story is feeding into sector rotation. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer.